May profits be upon you. Welcome to another weekly Forex Forecast. Check this out. This isn't a great time to trade. All right. The last couple of weeks of December, the last couple of weeks of the year, people are on vacation. That includes institutional players, okay, and smart money. And that leaves a lot of volatility out of the markets, okay. And so the markets tend to drift a little bit and consolidate. And, don't, the range isn't going to be very much. So I would highly recommend that you just enjoy the holidays or take some time off and work on your craft, do some back testing, do something else. But for those that are looking for analysis, I'm your guy. All right. And let's take a look at the euro or the euro USD. We're looking at the weekly time frame. The first thing I want you to look at is the candles. All right. Why? Because this is last week's candle. It pushed up higher. All right. You can see the bullishness in the market up until that point, each of the previous candles. And when they close higher than the previous candle, all right, you expect to see the next new candle to trade towards the high of the old one and beyond. All right. You expect to see some follow through. All right. I expected that last week. It did happen. We took out the high of the previous candle. All right. Took out that old high. But the bears came back in, and you see how it closed well within the range of the previous week. What does that usually indicate? It means that price is probably going to trade towards the low of the current candle. All right, it's probably the new candle is going to trade towards the low of the last close of the last candle. Right, we're going to see some follow through, and we're probably going to be coming into this market here. And here's the deal: you can see that there is, excuse me, all right, there is a fair value gap here already, a bullish fair value gap. Now, could the market use this on a weekly basis to find support for higher prices? It certainly could. And I want to see the um, what the reaction is once price uh, gets into that fair value gap. All right. So this is the area that we're going to keep an eye on. This low here this is the top of the beginning of this fair value gap. All right. And I'm going to dot it up. All right. And that line is at 1.1702. All right. 1.1702. Call it 1.1700. Call it. All right. Let's go to the daily. All right. So I'm expecting price to come down a little bit. Now, you see how this is the opening bell, this is the opening price here, right? And you see how it opened up here. It opened up, it gapped higher. I'm looking for this gap to close, but this is a gap higher, and that's interesting to me. All right, let's look at it on a weekly, on the daily time frame. You can see there was a daily fair value gap that price stabbed through, probed through, and then you're looking at this the 50% of this range, the range of this wick. You want to see price stay above it if it's going to continue higher. It did not stay above it. It did hold here, but the next candle on Friday closed well below that 50% and well below the low of the candle ahead of it. I'm expecting some more follow through. Now, uh, uh, what I want to see is price move that. Come on, man. What are you doing? All right. This is the low that we're watching. The one I just finished pointing out at 1702. Like I said, call it 1.1700. All right. I'm looking to see this new candle reach down here and find that low. And then we see some support for higher prices. We're going to see what the reaction is when it reaches this area. All right. Now, this is the weekly uh, fair value gap. All right. Let me make sure you, let me make sure that's marked. All right. That's the weekly fair value gap. All right. We want to see how price hold. If price is held here, all right, below this low, and this sell to buy wicks here. This is probably a area of demand on a lower time frame. but I'm looking to see if we have these confluences. We're going to shore up this fair value gap and see what we got here. All right, now also you should note that there is a fair value gap here. Why is that important? Because this is where the down close candles are that were overtaken by a stronger buy. All right, it's the sell before a stronger buy. This is an order block, folks. All right, and this is the displacement through that order block, which validates it. This is the fair value gap. All right, this is what validates this order block here. All right, and I don't have to draw it in. You just got to know that this line here is where price could stab into, and then we can see a move up higher. It doesn't have to stay in this fair value gap, but I'm looking to see what the reaction will be when it pulls down there. Now, again, like I told you in the U.S. dollar index analysis. See, this is the sell before the buy. All right. On the lower time frame. This is the 4 hour time frame that we're looking at. All right. I really don't want to see price come down to this low because this is already in the 4 hour fair value gap. I already traded in there. So if it comes down here, it's probably just going to take out that low and then move up higher. Okay. That's the way I see it. All right. I see over the next couple of days, probably some more penetration into this fair value gap, tapping into this area of fair value here, which is the order block itself. And I'm looking for prices to continue higher from here. So this bears watching over the next couple of days. That's it. All right. Tuesday is going to be your best day to trade. Monday is not going to have any, there's no red folder news items. All right. Tuesday has a couple with the US dollar having unemployment claims and all. After that, it's going to be kind of, you know, low range, low volatility kind of stuff. All right. Again, I appreciate you guys checking the video out. Thank you very much. Oh, I should mention, all right, there is an SMT here. SMT here. Uh, while the euro is making a higher high, you can see that the pound is making a lower low. What does that mean? What does that mean? If prices is going lower, I want to take the pound. I want to take the short in the pound. If it's going higher, I want to take the long in the euro. That's what that means. I hope you get it. You go with the weaker one, which is the pound, you want to take shorts. All right. You want to take that short. If you're going to take a short, that's the one you want to get. If you want to ride the strength of the US dollar, this is the one you want to take. All right. Come on, man. Work with me. All right. All right. But the euro made a higher high here instead of a lower high. So if there's a long to take between one of the counterparts to the US dollar, the euro USD is the one I want to take. All right. If it's going to go higher. So we'll know by looking at the reaction here. All right. If the market breaks through and closes below and into this order block, there's a good chance we're probably going to go lower. And I would want to take that low, the weaker of the two, weaker of the counterparts to the U.S. dollar. I would take that in the pound. But if this baby holds and we see support develop here, I would want to take longs from here. All right, that's it. And you don't swing for the fences. You swing for the targets that you have the highest chance of achieving. Right. If I can just get this one right, I'll be all right. All right. So that would be this high here at 1.1804. That's what that would be. All right. Sweeping some buy side liquidity along the way. Boom. All right. So let's see how the market reacts there. I think we should see some support here for higher prices. I hope you enjoyed this. May profits be upon you and happy holidays to all of my viewers. Thank you for watching. I'll see you in the next video.